Welcome back, I'm John Furrier, host of theCUBE. We are here in theCUBE's NYSE studios, of course. We have a studio in Palo Alto connecting Silicon Valley and Wall Street. Technology is the market. It's our NYSE Wired mixture of experts program. It's a theCUBE original. We were expert the leaders who are doing good work in the field of AI. We got Sam Awrabi. He's the founder and managing director of Banyan Ventures, solo GP, and a bunch of hot deals, cloud, neo cloud, GPU clouds, vertical, AI infrastructure. Great to have you on, good to see you. Thanks for coming on.
Thanks, John, great to be here.
So you're investing in two hot areas, AI infrastructure and vertical blank, apps, infrastructure, agents are going to do well there. Talk about what you're investing in as a solo GP, what do you do? And then what do you see? Start with what you do.
Yeah, absolutely. So my background, starting in 2018, I was the first technical sales hire in what's now a $4 billion AI infrastructure category, which is experiment and model management. So spent 4 or 5 years meeting 2 or 3 data science teams a day. That was my platform, those relationships. I took those relationships and launched Banyan to, instead of providing like guidance or consulting work or full-time work, to provide them capital plus all those other things. And so Banyan, my firm focuses on pre-seed and seed AI native infrastructure and AI native vertical application software. And I define AI native as building with state-of-the-art AI capabilities from day zero as you launch your company. So on the infrastructure side, there's a lot of research out of PhD programs that goes into infrastructure, so that's AI native there. And on the vertical side, it's targeting unique data sets, unique workflows, and building businesses around that.
It's interesting if someone's watching, like, oh, you're you're investing in AI infrastructure, pre-seed, what the hell does that even mean? Because people are getting billions of dollars to build out all these factories. So explain the nuance of the entrepreneurial opportunities in AI infrastructure. It's not just what people think, billions building nuclear reactors, there's a lot more going on.
Yeah.
Take me through the mindset of the market that you're investing into, because there are pre-seed deals that can grow fast, certainly, but it's not you're putting in $1 billion as pre-seed. So some of these pre-seed deals we're seeing for chips and whatnot are like $1 billion.
Right. So valuations are all over the place, round sizes, but in infrastructure, the first principle is watt per dollar efficiency. AI takes a lot of energy, and the last 20 or 30 years have been dominated by general purpose compute that could be used for every which use case, and now we're moving into a world of specialization, where across this entire infrastructure stack, there's highly specialized infrastructure being built that has much better efficiency, much better watt per dollar efficiency. So companies that pre-seed that I'm investing in typically have a lifetime of research behind them and PhD programs. They're very technical founders. They're 4 or 5 years ahead of the current market status quo in their respective fields. So examples are biological computing, radio frequency chips, inference chips, and a lot of others. One of them, Argentum AI, a decentralized GPU cloud. I led the pre-seed round there, so yeah. Also on the chip side,
we had Mitesh on.
Yep.
You're also an investor in his company.
Yep.
Positron is hot. He's got the best hair in the CUBE alumni.
He does
network.
have good hair.
He's got good hair.
But yeah, I mean, what's interesting about positron is, for example, when I'm saying this ultra efficiency watt per dollar angle, their chip has around 2 to 3x more memory than other generations of NVIDIA hardware on the market now. So that brings the chip inward on the data center, less power, less energy, less real estate, and actually improves the inference speed, because when you're on GPT, you don't want to be sitting there waiting for GPT to load. And yeah, I mean, Jump Trading co-led the Series B, a leading hedge fund. They're also a really happy customer. We also had other great investors like ARM in that round, Qatar, so it's a really exciting company for sure.
And Argentum, we've had Andrew on, for the founder of that company. Very innovative company, really growing super fast. I mean, that's opportunity recognition right there.
Yeah. So with Argentum, I met him, led his pre-seed round. We're the largest shareholder in the company. Kraken followed on. I believe you are also an investor, which is amazing.
Well, just small taste, but but that to me signifies the movement. You're starting to see two forms of infrastructure: pure hardware commodity, not commodity, but differentiated by just watt per power, token per watt, whatever it is. And then you got the specialized, kind of like SLA driven, I want to win the corporate enterprise or provide unique value add to that. Is there an opinion on your side of I mean, they're not mutually exclusive, they serve two things, but how do you view that market? It seems, not won't say bifurcated, but it seems to be two real clear value propositions. Get me power and compute and horsepower, token, watts per second, SLA that up, then you got kind of the corporate SLA around my workloads, agents.
Yep.
The SLA on the, say, Argentum side, the NeoCloud side is like, hey, okay, this software works, I'll give you what you want.
Right.
Versus my workload needs this security posture, I have agents flying around. They're two different scale.
They are. So if we take a step back, there's around $6 trillion of infrastructure that still needs to be built and come online. And that's an astronomical amount of land, power, humans that need to go build data centers. And so the market size itself is one of the largest build outs ever in human history, right? And so companies like Argentum are coming in and saying, hey, we can actually move a lot faster at finding land, finding power, having a customized SLA that fits that enterprise's needs. And we have a very clean balance sheet. We're not overly debt ridden. We aren't in a lot of scenarios yet as an organization that are not advantageous to us as a potential infrastructure builder, and we can move extremely quickly. And that's what Andrew's doing now. And that flexibility to really move fast and be creative, it sparks very large potential.
The demand
contracts.
curve, I mean, just go to the demand. The demand side's off the charts.
Right.
Talk about the verticalization, because AI is about domain expertise, domain data, specific workloads. Agents are super hot right now with all the action. Physical AI, which we've been covering here, is hot. You got robust, so this is an edge, an NVIDIA supercomputing vibe, powering all aspects of this vertical. You mentioned the matrix, we use that all the time. I mean, you could go to an agent saying, give me how to fly a helicopter.
Right.
Famous scene where they uploads the capabilities. In judo, those scenes in the matrix. That's happening now in AI.
Right.
Be my professor, be my ghostwriter, be my coder, be my marketing lead, be a lawyer, all this is happening.
Yep.
What do you see there as the opportunities and what you're investing in the vertical nature?
Right, so my view on the world with vertical AI is what starts as vertical becomes horizontal. And so what I'm looking for are highly specialized vertical application use cases that access hard to reach data and hard to reach workflows. And once they're integrated into that data and that workflow, that's a very meaningful workflow, whether it's the New York Stock Exchange on running compliance, or there's all these different examples. Once you're in that data, once you're in that workflow, you can then become horizontal and become the system of record.
Explain that again, rewind, because I think that was a key point. Explain that concept again, that makes it work.
Right. So, for example, one of my investments is a company in Italy. I was the only US-based venture investor, called Lexroom, and they focused on so far the Italian legal market, but language is a moat. So for general purpose LLMs, even Harvey AI, these other legal players, they haven't yet gotten to the level of accuracy in the Italian market. Italy actually has the most lawyers out of any country in Europe. So just that one market is actually pretty large. So they go in very vertically integrated on the language and on the workflows of lawyers, and they're having a lot of success, raised a Series A, more fundraising to come, and now they're expanding into other countries in Europe with ultra language.
What was once a side hustle or lifestyle business or cash flow funded business, you now can come in on a very narrow entry, lock something down and sequence horizontally.
Yeah, exactly. Or like other...
What are some other examples that you see?
Yeah, so in my portfolio, there's Examine. They're doing ultra specific AI for commercial real estate managers, like very large commercial real estate managers. Another round, I was an investor in ATG Group. Gary Tram from YC led the round, the co-founder of Jane Street, CEO of Nebius. They're replacing financial advisors. But think about all of your estate, all of your data from your financial life going into an ultra specialized AI. You don't need a financial advisor giving them a 2 or 3% fee. AI can replace a lot of that decision making and organization of high net worths. And that's like another example. So these are very vertically focused companies going in on mission specific workflows, and then they quickly expand into operating.
And so there's two paths to liquidity, M&A, so Harvey would buy your portfolio company, or they sequence and own Europe. And every language.
That's what we don't
sovereign, know. If you, it's a kind of sovereignty AI.
Yeah, so my first ever investment was acquired this week by Brookfield Radiant, and it's a $100 billion infrastructure build out. I was one of the first 5 investors in Ori as he pivoted into the GPU space. And that was the initial thesis, is that the UK needs a sovereign GPU cloud. So things went differently than maybe that initial thesis, because he closed great deals in the US, like Together AI, SF Compute, et cetera, et cetera. But for Brookfield Radiant, they have land, they have power, they want to build a very vertically integrated GPU stack, and the Ori team was a great partner to them to help accelerate that. It just made sense to partner together and acquire the company.
What's your outlook now as you look at the market? We see the role of NVIDIA has become really strategic in the AI infrastructure space. A lot of bankrolling, investments. I think some people look at it as kind of like inside dealing. I really don't. I mean, the accounting scandal, or the accounting issue of revenue recognition in the early .com bubble days, that was an accounting thing that was solved by SOP 97-2. I remember it vividly, so revenue recognition was born. I just think there's no real comparable to what NVIDIA is doing. I think you can't really compare them to what, no one's ever done this level of architecture from a venture standpoint, growth, the supply chain. I mean, Intel had their run.
Right.
But it was a completely different paradigm. So like, the fact that NVIDIA is making so much money, as is AWS and others, why don't they play a role as a capital provider, or they're motivated.
Right.
The more AI adoption, the more applications, it's a virtuous cycle. I have no problem with NVIDIA. I mean, they're making the market.
Right. So I mean, taking a step back, NVIDIA is worth more than all of Big Pharma combined. And everyone in this room today, if we went and did a poll, they'd all say, if you ask, hey, how many GPUs do you want for your AIs now and in the future? No one would say 0, most likely. So the GPU build out, again, is so massive that NVIDIA is the predominant market player, 95% market share. And if you look at their stock, even with the most recent earnings announcements, the margins are sustaining, the revenue is continuing to beat all expectations, I think 12 quarters in a row, yet the stock is actually going a bit down on sales to market value, right? So I think
there's some profit taking in there, but I still, in the long game that they have, I just don't see that fading anytime soon.
No, but I do think there's room for specialization, like what we talked about with Positron, and this is happening across the infrastructure stack. Other parts, there's different use cases inside of inference that need specialization, and those are their own potentially billion-dollar markets.
Sam, I want to get your thoughts on this, because I've been trying to compare this bubble, or this moment transition. The threshold has been crossed in AI, in my opinion, so like the genie's out of the bottle. People compare it to the .com bubble, and some even reference to the telecom bubble that popped for overbuilding of fiber. Quest sold to, I just had Global AI in, and Lumen bought Quest at the fiber. Those demand curves of the internet and telecom weren't there. So the overbuild, or the hype of getting all that data center and connectivity for the internet, the web, in 1999 to 2001, that was like, I mean, it was accelerating. I mean, Mary Meeker used to keep a stat on online population. So it was growing. So that was embryonic with evolution. Okay. Telecom bubble. No demand for services, not a lot of bandwidth. Web pages had barely any graphics on them. Now you got the infrastructure, the cloud, telecom, multimodal content.
Right.
The bandwidth needs are there. The demand curve for AI apps are high. So I don't see the demand curve dropping anytime soon.
Right.
So I think all the fallacies of what could happen, in my opinion, are a little bit need to be weighed. I don't see a bubble popping. I think the music might slow down in the musical chairs analogy, but that's just the nature of the game, but there'll still be need for more and more data centers.
Yeah, so I think in past markets, there was a bit of a build it and they will come mentality. I wouldn't say wishful thinking, but hey, let's build ahead of the demand and the demand will come. Whereas in AI, if you go into any enterprise organization, top down in the boardroom, they're saying, pounding the table, demand, like get AI in every workflow now. So there's such a insatiable demand across all parts of our economy to adopt and apply AI. And so there really is that's the difference now. And so even in my portfolio, from pre-seed and seed alone, there's 600 million in revenue bookings, and that's across like 23 companies. And so the revenue per employee ratio is so much higher than the software companies of the past. The revenue growth, there's multiple companies that have done 0 to 100 million in less than 24 months in the portfolio. And most of those companies are not even 100 people yet. And so we're re-architecting what the new 1% of outlier startups look like in real time due to AI and the demand underneath it. So I don't think we're in a bubble, but there'll be a lot of big losers.
No, your observation, well, there'll be losers, people who don't build a good product.
Yeah, well, there's a lot of funding, a lot of horses in the race, and only one horse can win. In most markets, are winner take all.
We had Matt, a CUBE alumni, who's got the Mill Venture, former Nest founder, Apple with Steve Jobs before, and I lived in Palo Alto for 25 years, know the Jobs family, and know a lot of Apple people. The Apple is the poster child for what you just said. The companies that will die from AI are the ones that just don't evolve. iPod, the hottest selling product revenue-wise for Apple, was in 2005, 2006, 2007. The iPod generated more revenue than anything else at Apple. So what happens in 2007? The iPhone comes out.
Yep.
Conventional wisdom would say, wait a minute, we're making so much money with the iPod.
Why go to this new market?
They collapse everything in. It's a phone, it's a computer, it's an iPod, it's got an app store platform built in. They just created a better product. Nokia, RIM are sitting there, BlackBerry, like they had all the piece parts. They did not do that. They died, Apple won.
Yep.
So to me, whoever doesn't align with the interface's voice, gonna be some agents, but there are moats.
Right.
There are moats for companies saying, we can actually pivot and eat our own.
Right, and I think part of my job is, it's not what's hot today, I'm at inception stage, very early in these companies' life cycles and markets, saying what will be hot in 3 to 5 years. And so, for example, one of my investments, Akash Networks, they just announced the first ever diamond-cooled server kind of cloud ever in history. So they're literally putting synthetic diamond in a server, cooling at 1.5x compared to liquid or air cooling. And so as we potentially move data centers into space, a new cooling frontier using synthetic diamonds actually is a very useful technology.
Who would have thought about that?
That's just a great example.
This is a great example of the white space opportunities that can go horizontal.
Right.
You don't know.
Yep.
All right, I brought the Apple thing up because I want to get your thoughts on this because, that's the paradigm. The companies that don't succeed are going to fail. Okay, so that means that there's going to be that 1%. So, okay, IBM's pivoting. So if you can do that transition like Apple did in the big company, it's productivity, not how many employees you have, so you're seeing that.
Yeah, it's revenue per employee.
It's a great metric.
It's your net margins after all of your...
So that's for the big companies.
Right.
Innovate or die, new metrics, all the other metrics are changing. But for startups, you mentioned this new 1% trend.
Yep.
Okay, or unicorns or decacorns, whatever you want to call them, that there's going to be a class of startups that will look like the 1%ers, but now that's in the power law as the 20%ers. Is that what I'm getting at? So you're starting to see a redistribution of what we use as the holy grail 1%ers.
It's all changing. So
explain this concept.
So Andreessen Horowitz in the past year, I'd say, came out with a data set that they procured, and A16Z, arguably the best VC in history, they're saying, hey, for consumer, the new 1% is 0 to 12 million in revenue the first 12 months of you launching your product. And for infrastructure, B2B, it's 0 to 6 million the first 12 months of you launching your product. And so in the formal world, like even that I used to be in ML ops or AI infrastructure, if you could launch your product and get to 1 million in revenue in the first year, you were the top 1%.
Yeah.
If you could get to 3 million, that'd be like, oh my gosh, that's unheard of. You're going straight to your Series A. And so just the revenue trajectories are changing in what the top 1% looks like. And then if you go to the really 0.01%, the true outliers like OpenAI or Anthropic, I mean, their revenue trajectory from launch, and it's public knowledge, you could look it up, is just, the world has never seen anything like that from a company perspective.
And as an investor, you're spotting it out. Well, great to have you on.
Yeah.
And thanks for coming on theCUBE, great to see you. Love the entrepreneurial opportunity recognition. Investors are also changing. What deals look like, what success looks like, all the metrics are changing. At the end of the day, it's the same old game. See an opportunity, go after it as fast as possible, capture it, lock it down, grow it, make it durable. Sam, thanks for coming in.
Thanks so much, John.
Sharing Banyan Ventures, doing a lot of great work. I'm John Furrier, theCUBE. Thanks for watching.